Hello, beautiful people. Welcome to yet another brand new edition of the ITU Forex class. In this week's edition, we're actually going to be talking about break and retest. So, if you've been trading price action for, any considerable length of time, I'm pretty sure you must have heard about the break and retest trading strategy, a couple of times because it's one of the most common trading methodologies which price action traders use to look for low risk, high probability trade setups. And one of the reasons why I want us to talk about it in this week's edition of the class is because it's going to help you to find good trade setups, okay? And it's also going to help you to, if you couple it with proper risk management, of course, because when we talk about these strategies, most times we're going to talk about them, the logic behind them, and then give a couple of examples of what they look like in practice, okay? But then, because the way we want to teach you this is obviously we're going to show you a couple of winning trades and maybe one or two losing trades along the way. But I don't want you to have the mindset of, okay, if for whatever reason, the only examples I show you are winning trades and maybe we couldn't find one or two losing trades along the way. I don't want you to have that at the back of your mind like, okay, this is the best strategy since sliced bread or whatever the case might be. And then you go trying to trade it with live funds without back testing it, without forward testing it, without doing any kind of test. And then, having all of that that euphoria that, this is the best strategy because I've seen a couple of examples and I understand it and it works. So I'm just going to bet all of my accounts on it. There's not only this strategy, but any strategy that we're going to be talking about. In fact, I would go the extra mile to say any trading strategy that you would learn, if you're not going to couple it with proper risk management, and you're also not going to couple it with the right mindset, trading psychology. What I mean by most times when I talk about trading psychology, risk management is easy to understand because when you tell a trader that if I teach you this trading strategy, for you to use it with proper risk management, then maybe you should risk X amount of your trading account's capital per trade. You understand? It's easy to understand risk management. Then I might show you a risk management calculator or just show you how to do it. It's easy to understand. But when we talk about trading psychology, most times that's a little bit harder for traders to grasp because the thing with psychology is that most traders don't even understand what it's meant by having a good trading psychology. So let me just break it down for you in the simplest way you can understand. You see, when we're trading, okay, and the reason why I'm taking a slight detour to talk about psychology, even though this lecture is about trading with the break and retest trading strategy, is because this is one of the backbones of profitable trading. In fact, it's arguably the most important. If you are going to divide the three things that you need to become a consistently profitable trader, meaning you're going to take trading psychology, risk management, and then your trading strategy. If you're going to split them into percentages, arguably, psychology is going to take like 70% of that share. And then maybe risk management will take 20%, and your trading strategy will just take 10%. The reason why it's so low with trading strategy is because a lot of traders think that they need a strategy that would win, 100% of the time for them to make money. But I'm here telling you that, in fact, you could flip a coin. It's as simple as you could flip a coin, and then if it lands on heads, you're going to buy, or it lands on tails, you're going to sell. And then if you're using that with proper risk management, trust me, you could end up making money after taking a large number of trades. So the strategy is not as important as most beginner traders or struggling intermediate traders think it is. Okay? Psychology and risk management, they are more important. In fact, psychology is more important. So back to the thing I was telling you about psychology. Most traders don't even understand what it is. So let me put it this way for you. You see, when we are trading, regardless of the trading strategy that you're using, okay, or the trading strategy that you learned, or whatever the case might be, it might be a mechanical trading strategy, discretionary, whatever the strategy is, whatever the trading strategy is, you're most likely not going to have winning trades 100% of the time. So if, for example, you were to take a series of trades, most of the times the distribution of those trades would be something like, this is just an example, okay? It would be something that, when I write W here, what I mean by W is a winning trade, okay? Sorry. So W, winning trade, okay? Sorry, double N, my spelling today. So W, winning trade. L, losing trade, okay? Losing trade. So here's the series of trade. This is an example series of trades that you take, okay? So let's assume that you took like something like a couple of trades, okay? The first trade you took was a winning trade, okay? It was a winning trade. The trade after that was a losing trade. Then the next trade was a winning trade. Then the trade after that was a losing trade. Next trade, losing trade. Next trade, losing trade. Next trade, losing trade. Okay? Now, the thing is, let's assume before you started trading with this particular trading strategy, the one I'm using in this example, you've backtested it. And from the backtest, you found out that after taking like 100 or 200 trades over the past couple of years with the trading strategy, it has something like maybe a 40% or a 50% win rate, as the case might be. Okay? Now, let's say it had that low win rate or that modest win rate of, let's even just say 50%. And it made a profit of something like 20 or 30% within that time period that you backtested. Most at times, inexperienced traders will assume that since the trading strategy has such amount of win rate and it makes this type of profits, for example, even if it's just subconsciously, when they go to trade with this trading strategy in the live markets, they don't expect to have losing streaks, okay, that are, spread out like this. Most of the times, they will be thinking that, they'll just have maybe one loss, one win, one loss, one win, and then maybe a couple of wins in a row and a couple of losses, but nothing extensive like, like 5 or 6 losing trades in a row. And then when they do encounter these losing trades in a row, this is when they start struggling, because instead of them to have a rock solid mindset, which should keep them firm and remind them that, look, we backtested this trading strategy. It worked over the past couple of, let's say 100 trades we took. And even though it only had, let's say, a 40% win rate or a 50% win rate, there were times when it had clusters of losses and wins. So maybe clusters of wins like 5 winning trades in a row, or clusters of losses like 6 or 7 or even 10 losing trades in a row. And it still managed to become profitable at the long run. So if you were to do what you're supposed to do, which is what you did during the backtest, you're simply just going to follow the trading strategy and take every single trade setup that it signals to you, regardless of how you feel. Because regardless of how experienced you are as a trader, I've been trading for years now, okay? And I can tell you very, very certainly that no matter how long you've been trading, once you encounter 1, 2, 3, 4, 5 losing trades, for example, in a row, it starts to mess with your mind. And you might start thinking, even if it's just subconsciously, even if you know what you should do, you might start doubting the trading strategy and thinking, okay, maybe it's because my trading strategy has a 1:3 risk to reward ratio, for example. And so maybe my profit target is just too much, especially when you have a couple of trades that reach maybe very close to your take profit, and then before they hit your take profit, they come all the way back to hit your stop loss, assuming you're not even using trailing stops or anything like that. This type of things can mess with you. And this is where the psychology part comes in. Because for you to have a firm psychology, the logic is that as long as you've backtested your edge and you've proven that it has an advantage that it gives you in the market, then whether the last 10 trades or the 15 trades or whatever the number of trades might be that you took, their outcomes were all losses, you're still going to follow that trading strategy to the T when it gives you a trading signal. When you see a trading signal, you're not going to doubt that signal. You're going to take that trading signal, follow it exactly following the rules of your trading strategy. And that's one of the things that's very, very difficult for traders, okay? Regardless of the strategy they use. So in a nutshell, when I say psychology, you should have a rock-solid mindset so that as long as you've backtested your edge, and you've proven that it works, and you've even tested it in the live markets, and you've confirmed that it actually does work, then whether you had 5 losing trades in a row or 5 winning trades in a row, you're not going to change your plan. If your risk per trade is 1%, risk that 1%. If your risk per trade is, if let's say the past couple of 5 trades you took, their outcomes were all wins, and now you're feeling invincible because you feel like, your strategy is the best. Nobody even knows about your trading strategy. It's the best thing that ever happened to trading, okay? So you're going to risk all of your trading account's capital on a single trade because you've been winning. So you want to double the account with just one single trade. That's where you need to understand that mistakes like this are going to cost you your account. They're going to cost you all of the work that you've put in. So you need to stay disciplined and continue risking 1% per trade. On the flip side, if the past 5 or 6 trades you took we're all losing trades, then you need to stick to your guns and don't start doubting that trading strategy. And so when it gives you a setup, you go down here and start thinking, you know what, the past 5 trades that I took were all losses, so I'm just going to let this one pass. No, you don't know the outcome of this trade. No one does. Because if you can't see the future, you can't know what the outcome of this trade is. So this, you passing on this trade might just be the trade that will recover all of the previous losses that you had. So psychology in a nutshell is for you to stick to your trading plan without deviation, regardless of the outcome of the trades you took. Risk management is, if you are risking 1% per trade, whether your past 5 trades or 6 trades were all winning trades, don't increase that risk if your trading plan doesn't say you should. And if your past 5 or 10 trades were all losses, if your risk per trade is 1% and your trading plan says you should stick to that 1% without changing anything, don't change it. Continue risking that 1%. Because you might have 5 losses in a row and you are risking 1%. And then you lost those 5 trades. Now you're down 5% on your account, for example. Okay? And then when you want to take the 6th trade, you'll be like, you know what? I took 5 losses in a row. And maybe let's just for example's sake, let's say you're trading on a prop firm challenge account or something like that, where your drawdown is very limited, like 10%. And so now you're thinking, you know what? I'm going to cut down my risk per trade to 0.25. And then let's say you cut down your risk per trade to 0.25, and that trade turns out to be a winning trade. So if you had let that trade run with that 1% risk per trade, and let's just assume that it's a 1:3 risk to reward ratio trade, that single trade would have brought you a profit of 3%. And let's say the trade after that did the same thing, it would have brought you another 3%, which would have covered for all of the losses that you took. But if you cut down your risk per trade to 0.25, guess what? All those 2 winning trades that you had back to back will not be enough to bring enough profits to cover for those losses. Okay? So this is the reason why I took a little bit of detour to talk about this, is because when I do most of these trading strategy sessions, okay, a lot of times traders assume that, okay, this is the best strategy and that's it. I want to make you understand that trading strategy is not as important as your risk management and your trading psychology. Yes, one trading strategy might be better than the other in the way that it picks or signals winning trades or whatever the case might be. Again, it's not going to win 100% of the time. But as long as you find a trading strategy out of the many that we've talked about on the channel that you resonate with, take it, learn it, and then backtest it, forward test it. When you've proven to yourself that it actually works, trade it on a small live account. And then after you've done all of this work, then you can deploy that trading strategy to larger accounts that mean something. But then you need to also trade with proper risk management and the proper psychology, because if your trading strategy is good, but your risk management is poor, and your trading psychology is good, you're not going to make anywhere. In fact, I don't think it's possible for you to have a good risk management with a bad risk management with a good psychology, or vice versa. Okay, so let's talk about break and retest. Okay, now that we have this important bit out of the way. Okay, so like I was telling you guys, the break and retest trading strategy, the way it works is in the name. Okay, so if you've attended any of our market structure classes, you know that I keep telling you that if the market is in an uptrend, the structure of an uptrending market is usually the formation of highs and higher lows. Then higher highs, higher lows, higher highs, higher lows, higher highs, and higher lows, as long as that trend remains intact. And for downtrending markets, the structure of a downtrending market is price is going to form a low, and then it's going to form a lower high. Lower lows, lower highs, lower lows, lower highs, lower lows, and lower highs, as long as this trend remains intact. So where does this whole break and retest thing comes into play? Well, you see, ideally, when the market is in an uptrend, we know that over a sustained period of time, regardless of, because when the market is in a trend, it's not going to move up in a straight line. It's usually going to move up, like we said, from these highs and then from higher highs. From higher highs, higher lows, higher highs, higher lows. But over time, price is going to move in the up direction. And if the market is in a downtrend, then it's not going to move down in a straight line. Again, it's going to move down a bit, and then it's going to pull back. then it will move down a bit and it will pull back, and that's how it moves. Okay, this is how price moves in this trending market scenarios. Okay, now where that break and retest thing comes into play is that the logic is that usually when the market is trending, okay, it's usually going to form, if it's an uptrending market, then price is going to bump into resistance. And then when it comes into this resistance, it's usually not going to be able to continue moving higher. Maybe due to exhaustion, maybe due to profit taking, whatever the case might be. Price would hit a level that it's going to find difficult to break. And then it's going to rest a bit or pull back a little bit from that resistance area. But we know that if the market is truly in an uptrending situation or condition, eventually price is going to gather enough momentum so that when it comes back to test this level, this previous level where it couldn't break, it's going to break above this level. Okay? And then eventually, you know, from technical analysis 101, we know that when price breaks a resistance area, that resistance area turns into support, and vice versa, which means when price breaks below a support area, usually that support area turns into resistance when price retests that area. And this is the whole premise behind the break and retest trading strategy. The idea is that we want to identify prominent support or resistance levels on a price chart, and then we wait for price to break above those levels, and then when it retests them and it shows signs that it's going to respect that level, then we're going to take a trade, okay, in the direction of the market's prevalent trend. Because the idea is that if we're truly in an uptrend, then this retest level should be respected. And so ideally, price should be able to also break above the previous resistance to form a brand new high. So I hope you guys are with me, please. The opposite of this is true for a downtrending market. So as you can see, when the market is in a downtrend, usually what you're going to find is that price is going to bump into a support level when it's coming down, and then it's going to find it difficult to break below the support level, maybe due to profit taking or whatever the case might be, or maybe there's just low volume around here. And then due to this, eventually price is going to retrace its steps a little bit from the support level and then pull back a little bit. But then eventually it's going to gather enough momentum so that when it comes back to retest this previous support level, it's going to break below it. And then remember again, technical analysis 101, when support is broken, it turns into resistance. And so eventually, if price retests this area, the idea is that the assumption is that price is going to find it difficult to break above it. Or even if it does break above this area, for example, which this support turned resistance, then if it's truly in a downtrending market, it has no business whatsoever to come to this level, as high as this level. And so if this is the case, eventually then you're going to take a short trade setup. Okay? A short trade in and around here. If you want to place it a conservative stop loss, then you're going to place it above this previous swing low. This is the lower high, okay? And if you want a more aggressive stop loss, it's going to be very tight, somewhere around here. But then, again, it's a trade-off. We've talked about this in plenty of classes in the past. If you're trading with tight stop losses, then you're going to get stopped out more often. But the plus side to trading with tight stop losses is that your risk to reward ratio can be very high. So maybe you might be risking 1%, aiming to make something like 4 or 5%. So your risk to reward ratio might be 1 to 5. So even though you might get your stop loss hit a lot more often than somebody who is using a more conservative stop loss, the profits that you're going to make is going to be much more than that person, because because his stop loss is very wide, his profit target is going to be most at times very little. His risk to reward ratio might just be 1 to 2 or 1 to whatever, 1 to 3 maybe. Okay, so again, it's a trade-off. You need to analyze what type of trader you are. What's your trading temperament? What's your style? What can you handle? If you're okay with having a very tight stop loss, of having a very low win rate, okay, but having huge profits and having a very long losing streak, like maybe 5, 6, 7 whatever losing trades in a row, if you're okay with that, then you go for the aggressive risk management style with your aggressive stop losses. If you're somebody who prefers getting stopped out a little less often, and you don't mind having small profits compared to somebody who is trading with a very tight stop loss with aggressive risk management, then that's you should create your trading plan revolving around that. Okay, so now that we've talked about the logic behind this trading methodologies, okay, let's look at examples, clear-cut examples on the price chart. Okay, so this is the chart of the Euro USD currency pair. Okay, and now this is the 4-hour time frame, for example. Okay, so I want you to pay close attention to what we have on the charts here. So just take a look at what we have here. Price has been forming, look at this, higher highs and higher lows, higher highs and higher lows. Remember what I told you about break and retest? The idea behind the break and retest trading strategy, let's make this a little bit bigger so that it's going to be easier for you to see. The idea behind the break and retest strategy is that price is usually going to bump into a level where it's going to find it difficult to continue moving above. Okay, so you can see that for this particular example, this was the resistance area. Price was forming higher highs and higher lows, and for whatever reason, when it came to this resistance area, it found it difficult to break above it, and so it pulled back. But then remember what I told you, if the trend is truly strong, if the trend is truly a strong uptrend, then this pullback that price will make, it should have no business coming all the way to the low or the previous low. It should make a higher low. It shouldn't test or break below the previous low. Okay, and this is exactly what we saw, because this pullback, the low stopped forming right here. It didn't test this previous low or break below it. So this is another indication that is showing us that, okay, price seems to be continuing in that uptrend direction. And so what's next? For a break and retest trader, we are going to draw this to pay close attention to this resistance area, and then we're not going to do anything until price successfully breaks above this area. And you can see this is what we had somewhere around here. Price closed above this area, and then it continued going up. But then, lo and behold, break and retest. Remember, break, it broke here, and then retest. It is retesting this previous resistance. Technical analysis 101. Price broke above this resistance area, and then now it is retesting it, and this resistance area is now acting as support for price. So, out of the blue, price respected this area, and it didn't break below it. So if you were trading with the aggressive stop loss approach, then once price showed that it's respecting this level, you could have entered somewhere around here, okay? And if you're trading with the aggressive stop loss, then maybe your stop loss might be, let me put it somewhere here, might be somewhere around here, just below this low, okay? And then if you're truly trading the break and retest strategy, you should know that you can have your profit target at the previous high if you want to be conservative. But you can also, because the idea is that this uptrend is supposed to continue, so you can even also decide to have your stop loss way above this previous high, because if truly price is in an uptrend, then it should be able to break above this high. In this particular example, you can see that price reached up here, but it didn't break above this high, and it eventually came to hit our stop loss. Again, I like showing you examples like this because remember what I told you before. We spent a ton of time talking about this in this class. It's not as if when you learn one of the trading strategies or whatever, that you're going to win 100% of the trades you take. Absolutely not. In fact, like I keep telling you guys, most of the strategies I use, the trades that I win are usually more often than not less than the trades that I lose. But because I'm trading with good risk to reward ratio, with proper risk management, and with the right psychology, eventually the profits from my winning trades are going to be so huge that they will cover for the losses from my losing trades and then give me extra profits in the process. Okay, so if, for example, based on the break and retest trading strategy, we took this trade and it turned out to be a losing trade, that's not a problem. We move on to the next trade. And what's the next trade going to look like? For this particular example, look, we have price forming higher highs, higher lows, higher highs and higher lows. But I want to draw your attention to something interesting around here. And what is that? Remember, I told you that if price is truly in an uptrend, then it should be forming higher highs and higher lows, and it should have no business whatsoever breaking below the previous lows. Now, when you look at the price action that we have here, you can see that price formed this low, and then it formed this high, and then it formed this higher low, and then it formed this higher high, and then it formed this higher low. But then price struggled to break above this resistance area, which is one sign that maybe price is going to reverse, or maybe it's just a deep retracement or consolidation. So eventually, if this was truly an uptrend, a strong uptrend, price would have had no business breaking below this low, but it broke below it. But then after it did this, this would have been maybe a liquidity sweep or maybe a fake out or whatever the case might be. Anyways, we take our loss here. But what happened next? You can see that price now moved from forming lower lows and lower highs that we assume that this trend has reversed to now continuing forming higher highs and higher lows. So in this case, we're going to look at, okay, where is the previous resistance that was broken? Okay, this should be somewhere around here. Somewhere around here. Let me draw it with this line here. Okay, and then when we move into the future, you can see that price is forming higher highs and higher lows, higher highs and higher lows, and then eventually this is now our resistance. Price broke above this, tested this, and then we had this pullback. Again, you would have seen this bullish engulfing, taken another trade, and again, it would have been a losing trade. 2 losing trades in a row, no problem. These things happen in the market. But then, here's something very interesting. Let me show you this losing trade because maybe you wouldn't have seen it. This was a resistance level. Price broke above this resistance level, and then it came back to retest it, and we had the formation of this bullish engulfing candlestick. So you would have taken a trade here if you're using the tight stop loss, for example, going for 1:5, 1:, whatever the case might be. This would have still been a losing trade, okay? So making no excuses about that. But then take a close look at what would have happened here. After that losing trade, this was a resistance area. And so when price finished going down here, it came here, it broke above this resistance area. And then when it came back to retest it, you can see that it kept getting rejected here. So if you had taken this trade now, remember we lost 2 trades back to back. If you had taken this trade here, after this formation of this bullish engulfing candlestick, and you had your tight stop loss somewhere around here, and you were aiming for a 1:5 like we did with the previous trades, look at what would have happened. Look at what would have happened. Price would have eventually hit your profit target somewhere around here. Okay? Can you guys see? It would have hit your profit target easily. You see? So this, we lost 2 trades here. This was one losing trade that we lost -1%. This was another losing trade. We lost -1%. But then this winning trade brought in a profit of +5%. So it paid for the 2% loss that we took from this losing trades and still gave you extra 3% profit in the process. This is how this trading game is. I'm not telling you that the strategy you're learning today or the ones we've talked about in the past, they're going to give you winning trades 100% of the time. Absolutely not. You're going to get winning trades, you're going to get losing trades, but you need to couple the strategy's edge with proper risk management and the right mindset. And eventually, you're going to take trades like this, which would more than make up for the losses you incur from those losing trades. I hope this makes things clear, because most of the time, like I keep telling you guys, most of the time when we do the strategy classes, people learn 1 or 2 trading strategies and then they feel invincible. They go out there without backtesting the strategy, without seeing what its win rate is, what its losing streak is, its highest, its max consecutive losses or max consecutive wins, without knowing anything about the trading strategy. And they go trying to trade that trading strategy on a live account with real money. And then when they lose money, they would say, you know, your trading strategy doesn't work. That's not how trading works. You need to learn 1 or 2 strategies that you're comfortable with, test those strategies for yourself, build those data that you'd have proof in to confirm that trading strategy actually does work, and then couple that with the proper risk management and the right mindset, and eventually you're going to get losses, you're going to get wins, but with the right mindset and proper risk management, eventually the profits from your winning trades will cover for the losses from your losing trades and still give you extra profits in the process. And with that, we pretty much come to the end of this week's edition of the ITU Forex class. But before we wrap up, I would like to use this opportunity to let you guys know about our ITU suite of bots, which are trading expert advisors or robots, which are designed to help you look for low-risk, high-probability trade setups on your behalf, and then do the whole stress of finding those trade setups, doing the proper risk management, and placing those trades on your behalf. So if you are interested in them or setting a couple of your portfolio for automated trading so that you can enjoy learning and also getting the EA to earn for you while you learn, then please reach out to us through the socials and drop your comments in the comment section, and we'll be more than happy to assist you, set everything up step by step, guide you through the whole process, okay? Once again, thank you very much for taking time out of your busy schedule. I look forward to seeing you guys in next week's edition of the ITU Forex class. Thank you, and God bless you. Have a wonderful rest of your week. Cheers. See you next week.